It gives me great pleasure to introduce the Ambassador of India to the Republic of France and the Principality of Monaco, His Excellency Mr. Javed Ashraf. His Excellency joined the Indian Foreign Service in 1991 and has held a number of prominent roles across Asia, Europe, and the US. He served as Joint Secretary in the Prime Minister's office under former Prime Minister Singh and then Prime Minister Modi. He assumed his role as ambassador here in Paris in July 2020. Ladies and gentlemen, please extend a very warm welcome to His Excellency Ambassador Javed Ashraf.
Well, thank you, Lisa. I think I'm the reason for interrupting that excellent conversation that was going on before. This was quite fascinating, listening to how investors in Asia look at some of the luxury brands here. Delighted to be here with Standard Chartered Bank, and as StanChart as it is widely known, and almost thought of as an Indian bank in India. It's had such a long history in the country and continues to be a vital bridge between India and the rest of the world. I was delighted to see that Standard Chartered has now a Parisian identity, independent of its London provenance, and is in some sense competing with London. So it's a real pleasure to be here, and this is an election season everywhere in the world and across the channel and over here. But we've just been through one of our own, and I was just, before this, inaugurating a center for AI excellence in La Défense with Madam President Valérie Pécresse, that was set up by TCS. And I've got to go to another event, and I feel like I'm on a campaign trail today. But I would say that we've just been through our election, and as many of you've seen now, the results, we've got Prime Minister Narendra Modi in his third term, which is the first time since 1962 that we've had a Prime Minister come back to office for the third time. So the first thing that you notice, of course, is that it's going to be a lot of continuity. And it is continuity not just by him, but the cabinet looks almost the same as it did before the election. And more or less the same people are in the key positions. So you can expect continuity. You can also expect the continuity, notwithstanding the fact that there will be a coalition government, which I think Prime Minister Modi was not used to having before this. But if you see the history of our coalition politics, some of India's best growth periods have been during coalition eras. So one thing that you've already noticed is that we are maintaining a pretty high rate of growth, ended the last quarter at 8.4, but the long-term trend is expected to be 7.5%. Some may have a more cautious view and give us a more modest 6.5 to 7%. We'll take that also if that comes. But what we are looking at is not just being the third largest economy by 2028, as IMF projects, but increasing the size of our economy by 10 times, from about 3.5 trillion now to 35 trillion in 2047, when we'll be 100 years free of British colonial rule, but we'll still partner with StanChart. So that's a 10-time increase. It doesn't seem very dramatic because we did grow about 7 times in the last 25 years. But what's also important in that, particularly from the point of view of those who look at the balance sheet, is not just in terms of growth, but we'll also see continuing macroeconomic stability. We've have a Prime Minister who is extremely careful about profligacy and is a strong believer in macroeconomic stability. So, the flexible inflation targeting, which our Reserve Bank has been following since 2016, will continue. That has helped not just to sort of dampen the inflationary impact after COVID, but also maintain price stability. We've current account will be about deficit will remain about 1.5%. Fiscal deficit is coming down. We expect to reach a positive in primary deficit sometime in the next 5 years. The debt to GDP ratio, the external debt to GDP ratio, they're all comfortable. The foreign exchange reserves is at an all-time high of 600 billion. or so. So in general, this macroeconomic stability provides a fertile basis for sustained growth, and you'll see this growth coming from all sectors. There's a rebound in consumer spending, including, I must say, in response to the previous session on luxury items as well. There is going to be continuing government spending, productive government spending, as many of you know, that our capital spending on government spending on infrastructure, for example, increased from 10% of government spending to 22% last year, and that will continue. You'll see we're seeing a rebound in what was an anemic private sector investment, and exports are, of course, growing very rapidly. We've hit $400+ billion of goods export and $400 billion of services exports consistently for the last 2 years. And we're expecting that our share of the global trade market will continue to grow. So you see in those economic terms, C plus X plus G plus X, well, O and I will continue to be supportive, macroeconomic stability. But I think what you should expect to see during this term are a strong focus on employment generation. One of the lessons that the government learned with a humbling lesson is that there has been growth, but that hasn't been translated into high rates of employment or productive quality employment. So you see a continuing focus on manufacturing sector, where we hope to go from 14 to 22% of GDP by the end of this term. And that is backed by a number of steps that have been taken and which we will continue to see. I see the clock, and we can talk a little bit more about it. Continuing development of the financial market, the banking sector reforms have produced results, capital market reforms, deepening of the credit market, fintech revolution in India is extraordinary, and also continuing incentives for sovereign funds, etc. The green transition will be accelerating. We are one of the leaders in terms of green transition, notwithstanding the scale of investments that we need in growing our energy supply and in demand. See the farm sector as well, because that's where I think the government felt the pinch of resistance, which has been there, but how to increase productivity and farm incomes will continue to grow. Infrastructure spending will continue to be a key driver of our economic growth. And finally, urbanization. Urbanization has become a major source of generating economic value. It used to be seen as a burden, but now with metros in 20 cities, the continuing expansion of expressways, and trying to invest in development of green and sustainable cities is going to become a important preoccupation, in part because you can see that India is experiencing the largest wave of urbanization, and they've become politically important to deliver. Governance reforms will continue. You'll see one nation, one vote happening, because otherwise we are in a continuous election cycle. You finish one election, you're into another one. We'll see judicial reforms that are so important now. I think that will be a priority, and continuing efforts to crank the bureaucracy into moving faster, which has actually happened, contrary to my skepticism when I was in the Prime Minister's office, but it is working. And I think the states, people pay too much attention to the center, but I think it is important to look at the states. And there is now growing competition among states to attract investments and to make it easy to do business in the state. So if you see a combination of reforms that are going to continue at the center and the competition at the states, it will hopefully lead to a far more congenial, far more easy environment to do business in. And that means from the entire business cycle, from entry to exit. So I'm now seeing the red dawn. But one other thing that I'll conclude with this, it isn't just what is happening in India that is important, but what's happening in the rest of the world. And what places us in a global sweet spot is really the geopolitics. You see the Geopolitics is now expressing itself in disruptions on capital, technology, and trade flows, the barriers that are being erected, the sanctions regime that are coming into place, the competition between China and the United States, which has a worldwide impact. That plus the supply chain concentration, which we learned to our peril during the pandemic and after the Ukraine war, and the need for supply chain resilience has led to trust being an important business factor in making decisions, and not just efficiency and the returns. So all of that is going to combine to see more and more global business attention on India in the coming years. And we see that here in France. I see that every day in my business interactions. We see that in the United States and elsewhere too. So whether we are talking about real investments or financial investments, I think there is going to be look to the future with great optimism. And now that the government is in place, it's got a long runway going ahead into the next 5 years. And for Prime Minister Modi, this is his legacy term, and I'm sure this is going to be a transformative one. Thank you very much.
Thank you so much, Your Excellency. Perfect backdrop for why India continues to be such a compelling destination for investors and corporates who want to diversify, who want to look into growth. You gave us a lot of confidence in terms of the surprising election results. But if I could come back to that, because you mentioned, I'm quoting you here, that the Prime Minister is not used to operating in a coalition ruling by consensus. So far, it has been very supportive of infrastructure spend, of investors. How do you think he will be successfully continuing on that path?
Well, what I said is that he's not used to a coalition government, but that doesn't mean he's not used to running by consensus. There's a difference between the two. But I concede that point. I think that there's going to be absolutely no let-up. You see the formation of the cabinet. You have seen the same finance minister, the same commerce minister, the same external affairs minister, the same home minister, defense minister. So I think you've already seen some major announcements in the first cabinet meeting, including the continuation of this massive social inclusion, social infrastructure program, which is at an unprecedented level. So all of that has already started once again. It's business as usual. And I think he'll continue to get full support from his partner. Mr. Chandrababu Naidu is a great reformer himself. He was the Chief Minister of Andhra Pradesh, was one of the first to start the digital revolution. Mm-hmm. He's the other major party, which is run by the Chief Minister of Bihar, has already been part of the NDA government in the past. So I don't see any sort of bumps or potholes on the smooth highway to prosperity.
You mentioned clearly the different states looking to attract foreign direct investment now, right? And so far, to this date, over the last 10 years, the Indian government has really very much been known for being very fiscally prudent.
Yes.
Would you see that will continue?
Oh, absolutely. I think from my own personal experience with the Prime Minister, he has deep conviction in fiscal prudence. He doesn't believe in a sort of a policy that gives us some high at the moment and then gets us into trouble later. He'd rather focus on building capacities now that yield dividends. And that is exactly what happened during the COVID. He focused not so much on largesse or doling out cash and running up an unsustainable deficit, but focused on pushing through bold reforms. And we are seeing the product of that. So I think you can continue to expect very, very strong fiscal prudence through the next 5 years.
India as a nation is, of course, very focused on easing the way to do business. And I know from conversations with your office that you're personally also very passionate about investment in technology, AI, etc. So I want to just spend a little bit of time, and I'm not sure how many in the room are familiar with the Gujarat International Finance Tech City, the GIFT City. I was wondering whether you could maybe walk us a little bit through what is happening on the ground, and also for clients of ours here in the room today, how could they take advantage of this enormous development that's happening?
Well, thank you very much. We just, in fact, had some time back the chairman of the Gift City. So the Gift City is a sort of an international enclave in the near the city of Ahmedabad in the state of Gujarat, which is where the Prime Minister comes from, and he was the Chief Minister there. It was his brainchild. And within that is the International Financial Services Center, IFSC, which has been designed to be at par with any international offshore financial center. And there's an act from 2019 which gives it a statutory status, and you have a unified regulator that combines the powers of central bank, the insurance regulator, the provident fund regulator, or the pension fund regulator, and the Securities and Exchange Board of India. So all the regulatory aspects are dealt with by one. There's a complete tax holiday over there. It's just the right place for people to invest in. It's got full capital convertibility with 11 currencies, so you don't have currency risk. And it offers a full range of financial services there. You've got banking, you've got capital markets, you've got insurance, you've got funds, with sovereign funds to pension funds over there. You've got a bullion exchange. You even have the Singapore Stock Exchange and the NSE, that is National Stock Exchange special purpose vehicle, which I sort of midwifed at one point in Singapore, to derivatives trading. You have a fintech. You even have universities over there in fintech laboratories. It's aircraft leasing. Airbus started aircraft leasing from there. So you name a kind of a financial service, it's there. And already all the major global banks have their presence. All Indian banks have their presence. The pension funds from Canada and Australia have their presence. Their sovereign wealth funds have their presence. So it's a place where you can invest. You have the advantage of being in India, but having all the offshore advantage, tax advantage. You get a pool of talent. You're in the same time zone. And you can use that as a base for a wide range of operations in India. And if there's anybody who needs help in accessing IFSC, I don't think you should need that help, but if you do, I'll connect you straight to the chairman of IFSC who can help you guide through it. But I think most banks, most financial institutions, asset management funds, all of them are looking to be based there.
Thank you so much, Your Excellency, for joining us today. I know you have a very, very busy schedule. We're very honored to have you here today. A big applause for His Excellency, Ambassador Mr. Jawed Ashraf.
Thank you very much.
According to last year's World Investment Report, India remains one of the most popular foreign direct investment destinations in the world. It ranks third highest recipient of FDI in greenfield projects, and it ranks second highest recipient in FDI in international project finance projects. France, of course, aims to strengthen its relationships with India, but doing business is not always as straightforward as one would think. So we are welcoming today a panel of experts who have actually successfully been operating in India for some time now. Let's welcome Agnes Bro, Vice President, Treasury, Financing and Risk at Technip Energies.
Thank you.
Shoaib Yaqub, Global Head of Capital Structure and Rating Advisory at Standard Chartered. Camille Serfati, Vice President, Capital Markets at GE Vernova. And Savi Heber, Partner at White & Case. Welcome to all of you.
Thanks.
Can we stay with you, Savi, for a minute? And I'd like to pick up on the theme of foreign direct investments. India has one of the most liberal foreign direct investment schemes in the world. Do you think, with what we just heard, this trend is meant to continue?
Absolutely. I mean, I've been doing this for 23 years, and since when I started 23 years ago, it's been a constant move towards liberalization. And literally, I think if you take maybe around 3-4 years ago, everything except defense, agriculture, and lotteries were open to foreign direct investment. There have been a couple of interesting rollbacks, and there's a bit of a theme there which has kind of happened around the world. One is around what I call brownfield pharma, but that hasn't really affected foreign direct investment much, where you require approval now from the government. The second is, I think, something that we've noticed particularly across Europe as well, which is a resistance to Chinese investments. So now any investor with a Chinese beneficial ownership needs to go through a investment approval process, which literally boils down to two things. You need 6 months to get the approval, and if the beneficial ownership is of a Chinese SOE, you won't get approval. And simply put, that's about it. But other than that, the story is supremely positive. So French investors, UK, American, absolutely welcome and completely free.
Talking about money and accessing international financing, I mean, that is can be quite complicated. And Camille, I would like to bring you in a bit on the conversation, because you at GE Vernova, you're responsible for overseeing third-party capital raising. For those of you who don't know, GE Vernova just spun off GE, I think earlier this year, I think in April. And you are an independent energy equipment and services company, and you're very much focused on accelerating the energy transition. India, of course, is a hugely important market for you. And the way I understand it, your USP, your unique selling proposition, is really help your clients bring that capital together, whether you work with local banks, with international banks, whether you work with export credit agencies, developmental financial institutions. It is certainly a skillful exercise. So how do you do it?
Well, thanks, Lisa. So first of all, I might not be covering everything that I would like to cover, so please I encourage everyone to reach out to me or to my colleagues to pursue the discussion. I know we're just before the drink, so I'm going to be short. How would we do business and how would we bring our financial services capabilities in India? We basically think that no way to support energy transition without capital markets. So this is what we have, why we have a big financial services team, which I belong to. And we co-develop projects. So we have a huge pipeline in India for around 600 megawatt of onshore wind business to be co-developed together with a local partner that know the rule, know the lands, know how to do business in India. We do invest as well in balance sheet, and we have a recent credential as well on putting some preferred equity on an onshore wind project as well, and a hybrid portfolio. And as you said, we bring third-party capital, which is easier. We bring other one's money. And we do partner with you said it, but with banks such as yours and other ECS, DFI, to bring our capabilities within the Indian market. And well, traditionally, India has not been an ECA market. It's more local market, local banks and local institution financing, but we see more and more international institutions going to India and doing some business. Recent announcement from SACE, partnering with an Indian corporation to bring some financing. So we see, as His Excellency mentioned, some future development for international capital markets.
Shoaib, you and your team, you also advise clients on financing and capital structure-related issues. I understand you work very closely with Standard Chartered's product team to really help channel capital into high-growth markets such as India. I wonder, what kind of capital flows do you see coming in and out of India? And do you see, just generally, is the future of financing evolving there dramatically, or has it stayed the same, or what's your take?
First of all, Lisa, when you asked me to be part of this panel a few weeks ago, Pakistan had not been beaten by India in the World Cup, so I have to say I've got a bit of mixed feelings. But jokes aside, I think the underlying story around India is great. I mean, the amount of articles I've read, red hot India, growing India. It's all about growth. We've heard so much about it. I won't go and delve deeper into it, but the underlying story is brilliant. However, and you talked about capital flows, so let me just give you a couple of stats before I go into, perhaps how we are helping clients. This year, equity flows in India, $22 billion worth till end of May. This compares to, I think, 34 billion the whole year last year. Debt, rupees, 2.5 trillion already this year, 6.9 last year. immense amount of investment going on. The ambassador talked about capex and infrastructure investment. The gap is huge. There's a tremendous amount of growth there. But overall, even that is 1/3 of where the investment needs to be to get to the net zero target in 2030. So that, for me, is the gap that needs to be plugged. Indian local corporates are doing that. One thing I see on the ground with my team, we look at ratings, for example, new ratings have gone up tremendously. We are twice, if not 3 times more busy than we were in previous years, working with a number of local corporates to get rating and then access to markets. Similarly, I see a lot of conversations with our clients to go reach into India, try and diversify, fund projects, joint ventures, and then think about growth over there. But the gap is so much and the potential is so much that I think it's just scratching the surface.
Do you think the bond index exclusion will positively move things in the right direction?
So I think it's kind of liberalization 2.0. Because right now where you see India and sort of the opening up of the market, there's a lot of possibilities, including the bonding index inclusion. I think the election's over now. There's a lot more stability. There was a bit of sort of, obviously, election does have an overhang, although everyone expected the government to stay. But there will be more consistency. There's a lot more to do. And so I do agree that the next growth phase is going to be. I also think one more fundamental point around financial policy decisions, as we talk to corporates even on the ground, this time the investment in growth is a lot more thought-led. A lot more of the discussion that we have with corporates is around long-term planning rather than the short-term growth. The ambassador also mentioned that the Indian Prime Minister thinks about that as well, focusing not on the large reason, but on the long-term story. I see that happening on the Treasury and CFO levels in local India. We also know our partners that are investing in India as well are thinking about long-term. Most of the projects are very long-term as well. So I do think that makes it sustainable inherently.
We had a session earlier about energy transition. The ambassador, of course, mentioned earlier the importance of energy transition in India. So I'm going to pivot a little bit to talk about energy transition for a moment here. I mean, it's been on a remarkable journey. Agnes, maybe let's bring you in on the conversation. Renewables, we all know they are really at the center of India's climate policy. But the balancing act between transition and energy affordability and energy security, I mean, it's not an easy one. And I know your company, you are a world-leading engineering and technology player in the market. I know you came only just back from India last week, you just returned. How do you see the energy market changing there?
Yeah, so maybe a quick word on Technip Energies. Clearly, we are a technology engineering company engaged in the energy transition. And for us, energy transition is LNG. It's part of the journey to this sustainability, to sustainable solution, energy solution, and it's also about carbon capture. So and all the work around the green molecule. So just to reposition ourselves. And as you said, Lisa, energy transition is a critical step to reach from energy security to energy affordability. Today, India is the 4th largest producer of renewable energy worldwide, with a capacity of 178 gigawatts. So 42% of total energy capacity by India. We heard His Excellency speaking about green energy, hydrogen, and the Indian government has set out an ambitious green hydrogen production target of 5 million metric tons per annum by 2030. So, okay, maybe there will be some delay because we, by the way, know that there are some technical issues around this new technology, but it's a strong commitment, and this is associated with a renewable energy capacity of about 125 gigawatt by 2030. So leading, I mean, for GE Genova or for us, brilliant footprint here, business perspective here. So that's what I would like to say, and maybe also to add that the Indian government, beside those plans, and we spoke about the very well planification done by the government and the stability, has also put in place production-linked incentives schemes called PLI for electrolyzer manufacturers. Solar panels production facility are rolled out in the market. So for us, clearly, lot of expectation on this market, and we do see as a booming market, though requiring a lot of investment in terms of capital market, but also investment in terms of human resources. And India also has a lot advantage because very skilled engineers, and we are working to attract some of them to develop our position in the market.
And also very young population.
And very young population,
which comes in handy. Camille, coming back to you, the way I understand what your company does, you kind of get very much involved also in helping Indian companies leapfrog their development of renewables. Can you maybe share, like, what are some of the most exciting projects that you're currently working on?
One, two, how much you don't know. What we do, and it's a little bit linked to what Anya just said. I mean, we at GE Vernova, we electrify the world and we decarbonize it, and it goes in parallel. So we have 4 businesses, and these 4 businesses are in India. We have 10,000 people in India. Yeah, out of the 80,000 people we have at GE Vernova. So it's a huge country. So we do support the Make in India, and we do Make in India. We have a recent project in which we sold some onshore turbines, and everything is done in India. I mean, we don't import anything. So I think this is the way we decided to do business in India, the Make in India. We have, as Anya said, very huge potential in terms of resources, young people, good engineering, and of course we do support the energy transition, and we do. Coal is still the largest generation sources, but India has a very ambitious target of having half of the power generation to be done by renewable in 2030, which is tomorrow. It's the day after tomorrow, so we need to be prepared. And we do support the, as you said, local companies, but as well we do bring our expertise in this renewable. I want to mention as well, because everyone has in mind the renewable, the hydro, the onshore, batteries. We do need a resilient grid as well. Right. And grid is part of this energy transition. And half of the electricity in India is transmitted and distributed by GE equipment, so we're very proud of that. And don't forget, everyone, we should have in mind that the grid needs to be very resilient, affordable, reliable, to support this new energy that will be put in.
And Agnes, again, liquefied natural gas. This is a real big focus area for your organization. I think not just in India, but I think globally. So, but I mean, there are some very complicated projects. So how do you get this done? What challenges did you have to overcome, and what are some of your biggest success stories?
Yeah. As I said earlier, so LNG is part of the transition journey, clearly. And well, we have just announced today that we have been awarded a new LNG project, not in India, but in the UAE. And clearly, LNG, we are doing, in fact, we are involving in the completion of our LNG project our Indian engineers. So clearly, they are contributing, our Indian force is contributing to the completion of those significant projects, which ultimately reduce the CO2 emissions. Looking to India, in fact, India has many LNG regasification terminals under operations, and few are planned to meet domestic LNG requirement. Clearly, what we are willing to do is to offer conceptual study, feed services for those LNG regasification projects. As mentioned, just to bounce back on coming comments, clearly we are performing our project, our Indian project, through our local sources. So we are not exporting services, it's really a made-in approach, made by approach. And for me, that's clearly why we have been successful. It's to tackle the Indian market with Indian strength. Otherwise, there are so many hurdles to unlock that you are not at the right pace. Maybe just also to highlight and to illustrate about, we spoke about LNG, we as Technip Energies are performing our manufacturing loading arm, and loading arm is used in fact to transfer the LNG, and to know that we are investing in India and we are currently the ability to manufacture loading arm in the country, and those loading arm being used also to transfer used for sustainable aviation, to launch sustainable aviation fuels, ammonia. And I didn't speak about green ammonia, but it's also extremely important, and also liquefied CO2. So clearly, this is back to my first comment about sustainability, bringing sustainable projects and developing those sustainable projects by using our strength based in India.
So there's certainly one theme coming out here very clearly, which is that of partnerships. So we started with you, Savi. Let's end kind of the official part of the panel discussion with you. So in your role as a lawyer, as a partner, I mean, you must advise clients all the time on like, how do you pick the right partner? What kind of due diligence do you have to do? So what kind of advice would you give people in the room here?
You heard all the good things. Now it's my time to scare you a lot. I think India is an unusual market in that it's a bit old school, and it's as important to do diligence on your counterpart as much as diligence on the asset. In most of the jurisdictions, you look at the asset. In India, you look at the counterpart, because that's very important. Because even some of the largest companies you can think of are fundamentally still family-owned. There's allocation of capital decisions made not in the CFO's office, but in the family drawing room. And most of your counterparts tend to have multiple businesses. So they're allocating capital across multiple businesses run by different children with multiple layers of family involved. So what I would advise is very much due diligence, see how they've treated former counterparts, former partners. Invariably, they would be experienced with more or less everybody you meet, where they've had dealings with former partners and how that's worked out, how they allocate. And are you partnering not just with the right counterpart, but the right member of the family of that counterpart? Is this the young son who's been run off to run some business, and turns out that he doesn't have the wherewithal to make sure that the right allocation of capital is done over a 5, 10, 20-year period when you need to run some of these businesses. The other thing I always tell clients is cultural fit. Really, it's a country where it's worth spending time with the people to understand, particularly if you're going to get into things like joint ventures, where actually sometimes there's a great business case. It makes complete sense, but it's an absolute disaster of a project because we lawyers then come to clean it up, where you know that the only problem is a lack of cultural fit between the principals running. It's a country where I always tell people for the principals to spend time with each other, get to know each other. Then on the asset class itself and asset diligence, there are just a few things. I mean, literally, this is like a 2-hour presentation I did last week to a Middle Eastern sovereign wealth fund in the Middle East. When you're looking at asset classes, I would always advise clients to, particularly if you're looking at stuff like infrastructure, concessions. And this goes into kind of outside lawyer territory, into your financial modeling. I would always say, and we come across this quite often, but sometimes the business is up and running, but you know that there's been a convenient interpretation taken as regards some important part of the concession where you're paying value for that in your financial model, which is not sustainable in the long term. That's one to watch out for. The second one is, and I love using this phrase, it's because we're dealing with conglomerates, there's a lot of related party transactions. Now, that can be both helpful and unhelpful, and I'll kind of give you 2 contrary examples. Sometimes the related party transactions could be extremely beneficial to the asset you're investing in, but invariably what you're doing is there's value that's captured, you're paying a massive multiple for it, and then lo and behold, after you invested, that value might creep away. Or you could have the other side. We don't call those bad related party transactions. I call them cash extraction contracts. That's the only way to politely put it into your SPA. But that's something to watch out for invariably when you're dealing with investing into Indian businesses. And the last thing I'll talk about, particularly because we've talked a lot about kind of PLI schemes, subsidies. There's some great examples, but like a tale of caution again, when you're investing to do the right amount of diligence. There was an EV subsidy scheme that was very active in India, very popular. A lot of emerging companies in the space, not the big players, new players, a lot of venture capital and kind of financial investor money that went in. But it was very obvious to anyone looking at it from the outside that many of the companies did not actually technically meet the qualifications for the subsidy, but they were still benefiting from the subsidies. It was literally so obvious, but it was seen within the domestic market as a market-wide problem, and hence the government was never going to call it out. But one thing about this government is actually on things like that, on things like bribery, they are more than happy to call it out and fix it rather than let that problem fester, but also it just becomes a market-wide problem. So that's another thing, and we saw this in the last time on telecom licenses, on bribery. These are 2 areas where I would say the country is moving to the better, but sometimes foreign investors, when they see a red-hot market, are so keen to invest, they rush in. Sometimes it's so obvious as to why the domestic players are not investing, but the foreign players are. But the story is pretty obvious. And I'll leave you with one last point. If you're not looking at making an investment, and we're talking energy transition, I've talked to a lot of European companies around who have a technology, and they want to license it into the country, and there are lots of deals. I don't think I'd done an energy transition technology license until 3 years ago. I'd probably done 3 or 4. In the last 3 years, I've done around 18. It's a fascinating world, but that's a whole different challenge when you're partnering. Licensing is very different from making an equity investment, and especially if you want to keep your technology, exploit it with other partners, you need to get these arrangements right. And I always say sometimes what makes a domestic partner the great partner to have, all those very characteristics are absolutely the worst thing if the relationship goes bad. The reason they are powerful, they locally have political connections, they are very, very strong, and they have the financial wherewithal, all of these things come back to bite you when things go sour. So just be aware of it. But I don't want to scare you away. It's indeed a very, very hot market. Maybe that's where I say you need to hire the right lawyers. Advise us to do the deal.
I would like to thank our panel of experts so much for their insights. I see you soon.
Thank
Bye-bye.
you.